First off, let's apologize to you guys for the building work that's happening above me and to the right of me. Hopefully it doesn't disrupt the videos too much today, but we are going to be taking a look at the technical analysis on Bitcoin after its most recent moves to the downside and potentially now a bit of a relief rally into tomorrow. So as I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe, and let's take a look at what's going on with Bitcoin's price action. Okay, so here we have Bitcoin paired up with USDT. We're on the 1 hour Binance chart. And following on from yesterday, we were talking about this move up into this hypothetical area, which actually played out really, really nicely here for those short positions that we were talking about yesterday. So we were talking about Bitcoin's price action moving up to the 58,969 to 59,400. Obviously, we were talking about that wave 4 not breaching the wave 1. If it does, it breaks the structure. And our trade idea here yesterday was to essentially go short with a stop loss up in this higher range and target out 1.5 on the risk reward ratio, or the actual profit area, which was down here at the 57,589 to 57,912. Obviously 1.5 is my minimum and usually what I like to do anyway, so we would nice easy take profit on both of those scenarios. If you're riskier taking this down, it was a 2.33 a risk reward ratio, and of course trading on 𝗕𝗘𝗪𝗚, which are my go-to exchanges. Links in the description if you haven't already signed up to them. So yesterday's technical analysis and basically Bitcoin's price action basically just played out exactly as we were kind of expecting. The issue that I have here is we did actually wick down just a fraction lower than expected, meaning that we might actually be in a totally different structure now, and it could actually be more bearish for Bitcoin's price action. Now, the hope is that we actually continue a run to the upside, and we kind of have a relief rally into tomorrow's Fed interest rate decision. The danger here is that actually we are done and we kind of now just continue this move to the downside, right? So the structure that is appearing here is a very much a corrective pattern. It's an overlapping nature of candlesticks, essentially telling us that we are not finding great strong support areas for Bitcoin at the moment. And in fact, if we zoom out just a little bit on this 1 hour time frame, you can see that there's this upper area of resistance right here between 58,388 and 59,588. Okay, so this particular area was previous resistance. We broke through it, we've come down, we found brief support here, and now it's back to resistance. So the probability, or the highest probability, is that this turns into the resistance line for another short position rather than longs. Okay, now our momentum is already overbought on the 1 hour time frame, but not on the 4 or 8 hour time frames. Those are actually recovering quite nicely and potentially are going to see a reversal. So that relief rally that I was thinking about is still potentially on the horizon, but we might first of all push back down into this range of accumulation as well. So we could be looking for a relief rally up to the previous areas of support resistance. So we are talking about 59,350 to essentially, we might as well call it 60,000 flat. For a relief run before we get into kind of, bigger moves to the downside, which are to be expected in my opinion here. So for Bitcoin, I think that's the most probable. I wouldn't want to necessarily go short just yet, not without kind of confirmation that we're seeing the correct kind of patterns emerging. Instead, I would be looking at, if we wanted to potentially go long on the market from this lower range down here with the idea of a break towards $60,000. So for that, I would be paying close attention to the structures. I think we're going to likely retest a little bit down here. I would estimate that we have the potential for another low to kind of come on in between 57,300 and 57,500. I'll go ahead and just draw a little box in here. That'll be my next kind of range where I think we could go long on Bitcoin's price action, but I would also put a very tight stop loss on it. So for example, we'll go and call it 57,490 hypothetically. Stop loss just down here a little bit lower, let's say at 57,200 approximately. And we'll target out that slightly higher range towards $60,000, which would of course be a really good risk reward ratio of about 6.52. But of course, 1.5 puts us in a really sweet spot as well for just taking some profit out of the market. But I do think this one has the potential to really rally rally a little bit higher. So I think we could probably put a trailing stop in. We could continue to move the stop loss into profit. Lots of different ways of kind of taking a look at it. But that would be my approach on Bitcoin's price action here for the kind of 1 hour time frame. It does look like we are going to see a little bit of volatility, a bit of a fake out to the downside, and then I think up to 60 before dropping back down into another move. Now, if we complete that kind of idea, and I'm going to go ahead and kind of think of it as maybe an irregular flat correction down there, then we could potentially be looking at this idea of a move back to 55 to 56, which would be another interesting range with where we found previous kind of support levels. So I'm going to go ahead and show you what that looks like over here. If I pull that in, you can see that this was previous support, and it happens to fall right in line with those expectations. But it does depend, of course, on how high this pushes. The higher this goes, essentially, the safer that you're going to be. The lower this pushes, or the less kind of relief rally that we find, the worse the damage will be later. Okay, but you can see that range down there being very, very interesting. So I would be looking basically for something lower than 56,700, but hopefully staying above the 56,000 or 55.5 to be a little bit more on the safer side. Anything lower than 55,500 could be quite damaging for Bitcoin's price action, retesting some of these existing lows on these structures. And of course, if we do start to see impulsive breakdowns, which would be much bigger in kind of those 5-wave patterns like so, then of course we are going to be targeting significantly lower for BTC. So trading stops could be your friend on all of those kind of scenarios. But like I say, if I am to be trading like this, I'm going to be trading on 𝗕𝗘𝗪𝗏. Links in the description below. They are the go-to platforms. Very easy, self-intuitive to use. And there's some fantastic sign-up bonuses and deals available to new users on those platforms. So if you haven't done so, check them out. Let's roll this up into a daily time frame. Because here, of course, we are starting to see the reversal in the market. We were initially hoping for 61.5 to $62,500, this previous area of resistance up here on this relief rally, but this potential turn in the market, although we can, of course, still see the potential in this move to the upside, it is very unlikely. It's still possible, but not probable, if that makes sense. It could be a WXYXZ, and we kind of tap into those higher ranges, but for the most part, we still think that there's going to be extreme volatility to the downside ultimately. We are in lower highs here on the daily time frame. That hasn't changed. We do have the potential ability still on that kind of case that instead of a dump in the market initially on the interest rates, we do find ourselves with the 3-wave move up towards $70,000, again trapping more positions in there, grabbing that liquidity, and then seeing the fallout of what the Fed rate decision actually means for the kind of medium term, which will be a move to the downside. So this is always a possibility that we want to be very mindful of as well. And again, if you don't follow Elliott Wave theory, you can check out 𝗕𝗘𝗪𝗏.com for course material, or join us in our free Discord server linked in the description down below, with a fantastic community happy to help out with all kind of questions and things like that. But the other part of this that's quite interesting is we do see those kind of runs to the upside. We will actually potentially start forming the head and shoulder pattern, which would be very interesting to kind of see as well. So if we did push up into those slightly higher ranges, we would be looking for a head and shoulder pattern to this effect. I'm just going to roughly draw that on there so you can kind of see that playing out. And of course, that break of the neckline could take you down to that $40,000 to $44,000 level. So lots of things to kind of be thinking about. I'm still bullish, of course, on the bigger macro picture because it is an overlapping candlestick nature. We're not, too concerned about the things that we are seeing there. If I turn on the EMAs and the SMAs here, you can see a death cross is about to happen tomorrow, probably. That's obviously a bearish one. So death cross essentially is where your 50 simple moving average, the yellow line, crosses lower than the daily 200 moving average. So death cross is right there. That'll probably be a tomorrow thing, which will obviously be a catalyst, again, I think, for what's going to happen with the Fed interest rates as well. So it depends on how aggressive they go. If we do see really aggressive interest rate cuts from the Fed over in the US, then that could be something that the market's not expecting. I think a lot of people are expecting like 0.25. Some out there are kind of expecting 0.5, but most recently we've seen the news with some calling out 0.75. So a 0.75 would be very unexpected by the market, and there'll be knee-jerk reactions to that. So expect a lot of volatility tomorrow. So be very, very careful in the market, essentially. Long-term holders probably aren't too concerned, but kind of those trading opportunities on the smaller time frame, you're going to see a lot of volatility. So just be very, very careful. Ultimately, I do still see us with a move down towards $40,000, somewhere between 40 and 44,000. This is a previous area of consolidation, as you can kind of see here, kind of tapping in that slightly higher range of 44,700. But it would, of course, complete out our kind of three-wave expectations on the market to complete the corrective pattern. We are in lower highs and lower lows on the daily time frame on this zoomed out view, so just be very mindful. The overlapping nature is still a bullish one, or this is just a kind of a knee-jerk reaction to what's happening from a kind of fundamental point of view. We are still bullish on 2025. We are looking for new all-time highs, where I suspect we are going to see some really good runs in the market. Now, we've obviously gone through the analysis many times before. You can go check out the videos or join us in a Discord server if you want more information about it. But essentially, 2025 is going to be the peak of the bull market, in my humble opinion. And as such, we want to basically make sure that we capitalize in on all of the accumulation that we see, not just within Bitcoin, but within the altcoins at these lower levels that we are getting the opportunities for. But yeah, that's going to sum up today's video on Bitcoin. Let me know what your thoughts are on all of this in the comments down below, or join us in our free Discord server. It's completely free, and I don't think you'll regret it. If you found today's video useful, informative, smash the like button. If you're new, subscribe, and don't forget to check out this video right here. It's not one you're going to want to miss.